Hello, listeners, and welcome to the show. This is Sam Abrika, the CEO of Nova Money, an AI financial planner designed to help you build financial freedom. In this episode, we will discuss whether going to university is still a necessary requirement to have a successful career. Today's guest is Akash, a chartered certified accountant who took the bet of entering the workforce at the age of 17, while everybody else was preparing for university. Hello, Akash, and welcome to the show.
Hi Sam, how are you?
Very good, thank you. Today we're going to talk about the need of going to university and what are the alternative ways to invest in new education.
Sure, sounds good.
Akash, can you tell us a bit about yourself?
So my name's Akash. I'm 26 now. I started my journey in finance around when I was 17 years old. So I decided when I was 17 to do an apprenticeship in accountancy. So I was looking for apprenticeships and I found one, and over the course of around 9 years now, it's been, I've worked in various different companies. I'm now a fully qualified accountant, and I've done this all without going to university. So I've done this through the apprentice route, but I've still got the exact qualifications that anyone who's gone through university would have. The only difference being I haven't got a degree, but I've got the accountancy qualifications that every accountant needs.
That's an interesting path that you have taken. Why do you think most of people need to go to university to become an accountant? And how come that you found an alternative way?
So I don't feel that people need to go to university. I think it's one of the relatively common misconception, and it's something that I had when I first was looking, because I wasn't initially looking for accountancy. I was looking for general sort of something business related, and accountancy came up, and I was a bit confused at first, thinking I thought that was for people with degrees. But I don't think people need to go simply because you still have to do chartered account qualifications after. Whilst going to university obviously reduces the number of exams you do in those qualifications, because you can get certain exemptions depending on your degree and how accounting heavy that degree is. So you can get anything between 3 and 9 exemptions out of the 13 exams, for example, for the qualification that I did. But I think that it's not necessary unless you're really, really valuing the sort of social aspect and the university lifestyle. I don't think it's worth the money. So, for example, if you're going to create about £50,000 worth of debt when you go to university, you need to weigh up whether that's worth it for you. If you just want to spend 50,000 on going to university to just have the lifestyle, then that's up to you. But personally, I think in terms of what you need to do and what would be the most financially astute option would be to not go and do an apprenticeship route, because you're also gaining your experience whilst you're doing it. So I started working at 17 and I've worked throughout now. If I'd gone to university, I would have started at 21. So at best, I would have 5 years experience now, but I've got 9.
Do you think that you would be in the same place from a career perspective? Or do you think that you're missing out anything in your career for not going through university?
I don't think I'm missing anything in my career. I think all it meant was that I started at maybe a bit more junior level, because when I started working, I had no background in accounting, so I had no accounting knowledge apart from very, very basic accounting knowledge. Obviously, if you've gone to university, depending on what sort of degree you've done, I'd hope you'd have more accounting knowledge, at least technically, than I did. But it's a case of I went into a role specifically for that. Whilst as an apprentice, you're not making the 6-figure salaries or anything like that. You're making a modest amount, but you're not spending going to university. So if you say I started at 18, I was thinking about this the other day. If you went the 3 years at university, you might spend about 50,000 for your tuition fees and living costs whilst you're there. But even if you're earning the apprentice minimum, which I think is around 8 to 10,000 a year if you spread it out, if you do like a 40-hour week, even if you had that, you might have 30,000 that you've made in the 3 years. So you're 80,000 ahead of where you were. So I think that is definitely something I think that's something that, and in my career, I'm qualified and I can apply for any job that I want. There's nothing stopping me from applying for any job that someone's got a degree for, compared to me, who's, because if everyone needs to get their accounting qualification. If you've got that, that's what mainly they're looking for. You might get some jobs that are trying to weed out potential candidates by maybe if they've got a master's degree or if they've got something else other than that, but it's quite rare that you'll find that.
A lot of people have the motivation to go to university, as you said, for the social aspect, for the branding, but also because they think it will be an accelerator for the career. They will have higher career progression, maybe higher starting salaries, and maybe faster promotion path. Do you think that you're earning as much as your colleagues are earning for the same level of qualification?
In terms of earnings at this point, I would be earning just as much as anyone else who's fully qualified in my company. Potentially, if you're talking about someone who's 26, who's done a degree, and 26, me, I potentially could be earning more because I had a few more years experience. So, because also with accounting qualification, so I did the ACCA qualification, you need a minimum of 3 years work experience to be classed as fully qualified, and you have to meet certain objectives. You can't just have 3 years and then that's enough for the work experience side. You have to meet enough. You have to have done enough things in your work to show that you're a rounded accountant. I think that's what they would describe it as. So even if you say at 21, done your ACA qualification in 2 years, which you might be able to do quicker than say I did it because you've got more exemptions from the exams, you still have to have a minimum of 3 years work experience. So that means that if you say the day after you graduate, you got a job at 21, it would be at least 24 before you could even be qualified, so to speak. So I think if you're comparing my age to that, then definitely I could potentially be earning more. If you're talking about in general, so say like in 5 years' time, when to be honest, a few years experience doesn't really make a difference at that point, I would say would probably be on par, because it's depending on what you've done in your career in terms of when you're in work. It doesn't make a difference in terms of salary whether you went to university or not. So all it does, it's heavily dependent on what the company you're in, what the role you're doing, and where you are in the world, so to speak. Obviously, if I was working in the north, I'd obviously be earning less than where I am now in the southeast.
This is everything that you have learned and now that you are 26 years old. But how did that compare with a 17 years old Akash? Did you know all of that? Did you have your family? Did you have somebody telling you everything in advance? Or did you just refuse going to university because of financial or ideological reasons?
So at 17, I would say I didn't know a lot in terms of what I do now. At 17, I was at college doing my A levels. I didn't really enjoy any of my time there. The environment wasn't for me personally, and I didn't have the support from my college that I would have hoped, that I think that I needed at that time. And at that point, I decided it was probably I needed a different route. I wasn't able to change what I was doing there, but I could change if I wanted to leave from there. I could change, and I decided to look into apprenticeships because I felt that it was more of a hands-on learning rather than learning all the theory, but on things that you may or may not even use. Because I did quite broad A levels. I did maths, I did economics, which obviously they can work together. I did then biology and psychology. So they're very broad ranging at that point. When I decided them, I didn't know what I wanted to do. So I was like, right, let's spread around maths and sciences and economics as something that I'm relatively interested in. So I thought at that point, I just didn't know what I wanted to do. And I knew I was business minded. I knew I was good with numbers. I've always from a young age been good with, sort of, I'd say, mental arithmetic, sort of knowing how to sort of problem solve with numbers. Obviously, I'm not I wouldn't call myself a mathematician at all, but I'm definitely someone who's confident with numbers. If I see numbers in front of me, I would do what I can to resolve the issue. So obviously accounting jumped to me when I saw it come up as an apprenticeship. It was something that was, I thought, well, I guess that's suited to my skill set. And yeah, so I think, but definitely I was learning as I went along. I didn't know what I want. I didn't know, and I didn't really have a huge amount of support when I first started. So my parents weren't initially. My mum was very supportive of me. My dad just didn't understand apprenticeships as much because I guess from his time, apprenticeships were more known for sort of more trade jobs. So you say like your electricians, your plumbers, builders, and that there's nothing wrong with thinking that that's what they were. That's what they were traditionally for. But obviously now they're more for professional roles. So he just thought that I maybe wasn't going for what I could achieve. But obviously after a little bit of time, after maybe probably about 6 months, I think he realised that I was on a upward trajectory, and he was obviously could see that that was working, and obviously now he'll tell everyone that he's happy that what I achieved. So obviously it's nice to know that I've proved someone wrong, and I feel that I've proved plenty of people wrong throughout the journeys. People at my college, my tutors at college, they all told me that I wouldn't get anywhere not going to university, and obviously I've thrown that argument out the park in my opinion.
That's a very tough position to be. When you're 17, you don't know yet about the world, you have never been in a corporate world, and all the adults are telling you, hey, this is dangerous, you're not going anywhere, you're going to struggle in your career, you're going to limit yourself. What was the inner voice or the inner strength that you had that made you pursue your path of not going through university?
My strength was kind of like I just knew that. Well, I knew that A levels weren't something for me, so I was like, if I don't like A levels, I'm not gonna enjoy studying a degree because it's gonna.
What is it that you didn't like about the school system?
I think for me, I just find in terms of the traditional education route, I don't know how to explain it, but it's kind of just it doesn't kind of like when you're there, you just don't feel like you should be there. I think it's kind of like I just didn't feel that I was someone who fitted in there, and just learning from textbooks and just basically learning to sit an exam doesn't really work for me. And obviously I had doubts when I went into accounting because obviously accountancy is known for a lot of exams.
Yeah, ironically, that's exactly what you did on your own.
However, one thing that I did learn is that the exam style is so much different. So you're not just so when I say you're studying, I don't know, economics, for example, you'd be learning, okay, this is the definition, and right, just try and point it in the right direction where you want. What the question will ask you something, and you just need to answer that question, so to speak. But I find with accountancy and maybe other professional qualifications, the exam style is more application technique. So, say in one of my exams, it'll go, here's a scenario of a business. Here's something. But it wants you then to think of other things what could then sprout off that. So someone might be asking for tax advice on something, but then that might impact something else. So it's asking you to then discuss that and then discuss the other things that affect off that. And it's kind of applying what the knowledge is, but applying it to sort of a real life scenario. And I find that A-level exams, for example, and as well GCSE, they don't come across as more, they don't have real life sort of aspects to it, in my opinion, that how the questions are written and what they're actually asking you to do. But professional qualifications, I find, are asking you to do it more, and I find that actually does help me retain it. So if you ask me to remember anything from my psychology lessons, I'd probably be a handful of things that might have stuck. But if you ask me to remember an obscure part of accounting knowledge that I don't use now, I could probably, within a few minutes of just quickly reading it, I would, oh yeah, I know exactly what that is. But if I was to read that on psychology, biology, or maths or economics that I don't use now or haven't come across in years, it would take me a long time to understand that again.
I see what you mean. I think what you were lacking was the context to see how to apply it. And because the context will give you the intellectual stimulation to really understand the problem you're trying to solve. Why is it important? What are all the other aspects that are correlated and linked to the problem, just like you described? It happened to me, it was at university, not in high school. where I spent years studying thermodynamics, physics, quantum physics, etc., with very abstract, like experimentation to empirically demonstrate formulas. But it was so abstract and so theoretical that I was even wondering, how do I even apply that in real life? I'm supposed to be an engineer. I'm not supposed to be like a researcher working with formula on a chalkboard. It's only at the very end that we finally learn, okay, this is the how you can apply the formula in real life. And by the way, you won't need half of what you have learned. It was just to give you the knowledge and understanding of why this is right. And definitely it's not for everybody. It's not the most engaging way to learn about a topic, and it's definitely not the quickest path on how to apply it. For me, the benefit was that it taught me critical thinking, and it taught me how to analyze big problems that seem just way too big to be resolved, and how to decompose them into smaller problems that are becoming resolvable. And then how to approach small problems to make sure that even when you can't find the exact right solution, then you can find approximations. Because let's be honest, in real life, most of the theoretical stuff that we learn at school is not directly applicable. We just learn theory based on a simplification of our world. That's in the ideal perfect world. That's how all physics classes started. In a perfect system, this is how it will behave. Guess what? Life is not a perfect system, so we need to make approximations. And this was the interesting part for me, understanding how do we go from a theoretical complex system into something that we can apply it.
Yeah, so I think I completely agree with that. So when it's too theoretical and too idealistic, it just doesn't really work in terms of when you're trying to think. It just won't work that way. So I think for me it was just working with something that's more real world. Just sort of, I think it obviously hit some part of my brain which could then go, right, I can understand that and I can retain that, and that's how it works. So, and I appreciate not everyone might work in the same way, but I think that plenty of people can see that maybe it's not a one size fits all. So it's not just go to university. There's plenty of people that maybe it might be more beneficial to go to university. They need that time to gain independence that they may not have got as growing up, and they're learning other life skills whilst they're doing it. So it's understandable. But if I take the example of my cousin who's 4 years older than me, she's also an ACCA qualified accountant. She went through university. She did a 4-year course. She did 1 year working in an industry. She still qualified 1 year after. Obviously she qualified before me in terms of because she's 4 years older. But if you look at the age group, I think she was 24, 25. I was 23. So there was a difference in terms of how quickly we qualified. And she also said that when I was doing it and she was studying, she hadn't finished it. She goes, if I had that option back when I was going, I would have done. I feel like it would have been better for me to do an apprenticeship, because it's just the degree is not necessarily it's not the end goal having the degree. For example, my brother's a physiotherapist. He has a degree. He got a degree in physiotherapy. He's a qualified physiotherapist as a result of that. He doesn't have to do an additional qualification to become a physiotherapist. He can do additional qualifications to do other specialities, but he's the end goal of, in terms of becoming qualified, is the degree. So that's understandable. But obviously accounting, there's still another level after that. And if you can bypass the middle level to get to the end, then why not?
You said that it's not the final game to have a degree, but I think a lot of people, for them, this is the final objective, to have a degree, because either they want that in their life, either they want that to please their parents, either they want that to feel better and confident, or maybe just they enjoy the topic of the university. So you said that you like math when you were in high school. I also like math, and one of the topics that I always liked at university was mathematics. So it's the least applicable and the most abstract. But actually, that's what I liked about it. It was purely abstract, And it really taught me logic. And because I think this is something that we should all learn a bit more. Logic, how to think, how to critically think, how to understand what is true from what is not true. And unfortunately, it's only at university that we went to this level of understanding the logic, understanding assumption, assertion, how to validate, how to unvalidate thoughts and reasoning. So for me, that was the enjoyable part of university, although it didn't have any direct real life application. There's indirect application to almost everything, every conversation, every problem, everything that I can approach in life.
It is kind of very influential in why I'm the way I am in terms of my logical thinking. So, and I think accounting is a very good career if you're very logical, as I think, because generally in its basic form at least, accounting is there's rules, there's ways you have to do things, so you have to follow a process on how to do it. If you follow that, you're fine. But obviously, you need to be able to interpret what you've done to then come up with solutions or tell the reader or whoever you're preparing all these financial data for. You need to tell them the story of it, of what it's actually telling you. There's no point saying, "Oh, I've prepared the profit and loss statement," but what is that telling you? So that's what an accountant will tell you. He can walk through all the elements of it and how that's come to it.
Absolutely. Why do you think so many people are scared of numbers and are scared of the profession of being an accountant, although it's a profession in demand with a lot of career opportunities?
I don't know why people are necessarily scared of maths, but I kind of find that it's more socially acceptable to be like, "Oh, I'm terrible with numbers." But if someone said, "Oh,
Why is that?
I don't know," but if someone tells you, "Oh, I'm terrible at reading. I can't read at all, or I can't write," no one would say that because they know if you said that, then people would think, "Well, no one's going to hire you." But people thinking with maths and numbers, it's like, "Oh, I can get away with not needing that. I just yeah, they get scared of it, even though I personally think that it's very. I mean, obviously, I'm good with numbers and I'm confident with numbers, but it's very. Once you learn the method, you just keep going, and I think it's perseverance because I think that having numerical skills is just important for just general day-to-day life because it's kind of like, especially with personal finance. So you get a lot of people who say, "Oh, it's only a £5 a week or £5 a month. This cost of something," but my brain, it's always like, okay, times that by 12, times that by 52. If something's £5 a month, it's £60 a year. If you've got four of those, then you're spending £240 a year on something. If you think about it in that way, it's actually helping your personal finance. Not,
Yeah,
yeah,
it helps you
yeah,
make
because
better financial decisions for
again,
sure.
with salaries being annual, if you're earning X amount per year, you think, oh, that's a lot of money. Obviously, you get taxed on that, but it's kind of like you need to then scale that back to the month. You need to then scale that back to the week, depending on how you budget. For me, I personally just budget for the year, but and then I just roughly, well, not
Wow,
necessarily.
you
I
budget
know
for
what
the
my
year,
monthly expenditure. Yeah, I kind of know what my
like
monthly
companies.
expenditure is, and I just, but then I know what because obviously not everything comes out monthly. I have some things that come out annually, some things that come out more like quarterly. So I kind of like, I know what all my spending is, and I extrapolate for the year, and then I have, what's it called, a weekly, monthly, and yearly average. But obviously, if I'm looking at, say I'm in June and I'm looking at, I know that, say I might have paid for holidays this month, but I obviously know that in February I probably haven't. So it's not quite. I can't say, oh, I'm going to spend X amount every month because I know that some months it's going to be might be 1,000 I'm spending. It might be 5,000 I'm spending on one month. So it really depends on what month of the year it is. So I have a yearly thing, and I just know that if I am within the overall, it's fine. I mean, there's some things that are obviously typically monthly. So if I know that my grocery spend is X amount every month, I shouldn't really have too much variance from that, unless let's say an extra week in the month and I've done an extra shop in that week. That's the only difference it really should be.
Do you apply your business skills in accounting, in financial projection, in comparing the actual versus the projected amount, all the stuff that you do in your professional life? Do you apply that
I
to
kind
your
of do.
personal
I
finances?
do in a on a more basic level. So obviously, I'm looking at much smaller numbers compared to what I do in my company. In my company, I'm looking at millions rather than what's it called as an individual. So it's not directly comparable, but it's I think the same concepts are the same. So you look at everything. Does if you look at your spending, I have obviously tracking my spending. I look at what was this month, what was and I look at this month and go on the types of spending. Go, is there anything that looks unusual? That's normally when I'm working when I'm at work. A lot of my thing is like because there's so many transactions, you can't look at every single transaction one by one. So you look at trends. You look at how things have been categorized. If you see something that just sticks out like a sore thumb, you then drill into that. So say I'm like, oh, I've spent £500 on drinking this month for some reason. Not that I do, but it's kind of like I'm just like if I saw that, I'd be like, well, that doesn't look right. Have I done that correctly? Is that true? How have I done that? I ask questions on all the on what the type of spending going. Is that have I gone a bit too far on my spending this month? It's the questions that's those sort of questions. Then if I have spent, okay, what can I do to change that? And or if it's a case that oh my electricity bill's really high, what can I do to change that? Can I what's it called? Change how I behave in terms of how I use electricity. Do I waste things? Do I just leave all the lights on in the home and just what's it called sit in one room, or do I all these sort of things, or am I contract too high? So it's these sort of things you just ask yourself. I mean, I wouldn't expect everyone to have deep understanding of all these things, but I think on a I think basics is looking at your spending. If you do it regularly, you'll notice if something looks wrong. And I think that's something that's very important for everyone to really do is to monitor. I mean, I do it daily. I update.
Yeah.
I have obviously I've used Nova, so I see that updating daily. So I keep an eye on that. So I see how things are going. But obviously, not everyone might use something that looks every day, but they might go every month. They might see their bank balance go from one to the other, and they might look at a more high level. So they look at bank balance and not the underlying thing. But I think you've got to start somewhere. So I think at a very basic, you should be looking at your bank balance, how it's going. Is it going up? Is it going down every month? Is it staying the same? If it's staying the same, is there any way to make that go up? If it's going down, then you really need to look at the details, going, why is it going down? And if it's going up, then things are, you're doing the right thing, but there's nothing stopping you from looking further.
As an accountant, you like numbers, you like analyzing the trends, you like analyzing the data. And a lot of our very good Nova users are accountants because they love looking at all the trends and the numbers, and they're the first ones to report when something looks wrong. But a lot of people, they don't like this process. They really don't want to be looking at their numbers and the charts and what's going on. Is there anything unusual? Do they start to spend a bit too much in certain category? What's the overall impact for their savings goals? Why do you think you like doing all of that, and why do you think a lot of people don't enjoy doing it?
Some of it might be down to fear in terms of they don't want if they know that their personal finances might not be in shape. It's fear. I don't want to see it. Like if I don't see it, I don't know about it, and if you don't know about it, it's not there. Yeah, it's not
They
there,
prefer
so
to
you don't
avoid.
have to. It's not something to be concerned about. But I think it's no,
You can't win with this strategy, can you?
if your finances are good, but you just don't want to look at them, then fine. You're lucky in that sense that it's working out. But if you're probably in the majority of people, if you're not looking at your finances, the likelihood is potentially they're not in the best of shape, and if you're not looking at them, you can't take control of them. And I think,
Yeah, there's this very famous proverb in the business world. If you can't measure it, you can't manage it. That's why we have accountants, because we need to measure the financials and the numbers and the data.
On month, then you can't measure if you're spending too much or not, or you're spending less than what your income is. So I think it's very important. And I think if you do that if you start early doing that, so I didn't do it as because I was an accountant or anything. It was a case of I think I was in in college studying my like doing my accounting qualifications, and one of the people in my class was using an app which you literally just manually track, plug your spending in and your income. Yeah, they
With
were just
manual
doing that,
input for every
and
single
it was something
transaction?
they used for just basic sort
Wow.
of keeping on top of things. And I started using that, and that's one thing that I think that's where when I first started taking more interest into actually what I'm spending, because I used to work in London, and I used to buy lunch pretty much every day. And when you're in London, the bare minimum is £5 pretty much, unless you go to a supermarket. Uh, yeah, if you spend
If you don't,
five
if you're
pounds,
not too
even if you're
hungry.
spending probably the basic £5 a day, you do that 5 times a week. That's £25 a week, and then obviously that's £100 a month roughly. And you're thinking, what could I do with £100 better? And it really made me think, oh, really, am I spending that much money on lunch? So I think that was one of the eye openers for me. And I think if plenty of people did that, even just on one or two categories, they would realize something like, oh, that's a lot. Or say your grocery spending, because you do it once, you might do it once a week, and you think, oh, it's a relatively small amount every month, potentially every week. But if you think, okay, put that for the month, and then put that for the year, how much are you spending? And when you think, oh, you're spending £50 a week on shopping, on groceries, um, in a year, that's quite a lot of money if you think about it.
Things add up very quickly. And we're not even
Yeah,
talking yet
yeah,
about the
that's not.
compounded interest rate.
Yeah, not even
This
talking
compounds
about
even
like in
faster.
terms of if you're saving money, where to put your money. If you put your money in one account versus the other account, how much difference that can make. I mean, these times obviously maybe a bit less because interest rates are on the floor, but in normal times, but I guess it's still it's a time when you really appreciate how low the rates are. But in normal times, you might think, oh, I'm getting a good rate, but you might be getting 2% on your thing, but another account could be giving you 4%, and you're like, well, you're halving your money halving your interest in 1 year, but then that's compounding every year, so it might only just be a little bit.
And compounding goes
Mm.
very, very quickly. So since we have today an accountant in the show, I'm going to ask you a question. We have a lot of users. Their problem is they don't know how much they're saving. And they take the shortcut of believing that if they move money into a saving account using a robot or auto random transfers, then this is the amount that they have saved for the month. But you're an accountant, you know the concept of P&L. Every month you calculate, or every quarter, how much you earn minus your cost, and that's basically your P&L. And it's a principle that applies also very well to personal finance, which, by the way, is something that Nova does automatically for people, because most people are not accountants, they don't know the accounting rules, they don't know how they should look at their finances. So you personally, how do you track your monthly
So for me,
savings?
I have a savings account, and so obviously I earn interest on that. So I might, as I know what you're trying to say, so if you say you have £250 left over at the end of the month, and you put that into a savings pot, your bank just automatically transfers that somewhere else. But that might be transferring it to someone that's got no interest. So you might have £250. Yes, you saved £250 that month in physical terms, but next month that's not worth £250. That's worth maybe £248. So, and then obviously as you keep going, you keep adding that, it's going down. But in terms of, so for me, I transfer my money. When I get my income, my bank's quite good in the sense that it has a sort of, you can split how you have your income. So you get your income in, you can move it between pots. So I have a pot for bills. So I just move anything that's to do with a bill and my bank will automatically pay it from that pot. So say my mortgage goes out of that pot automatically. So I just transfer all my money into there that I need for my bills, and it calculates it for me because it knows what my previous ones are. I then have an amount that I want to spend each month. So I have roughly the same each month that I just have as disposable income. This is what I can just spend on anything. And then I have a savings. So the majority the rest at that point just goes straight into a savings pot and just earns interest from the day I earn it, day I receive it. So rather than going at the end of the month after you've had a month of just holding the money in one, say earning nothing. It's been earning money since the moment I got it, and if for any reason I do need it, say I've got my car insurance to pay, okay, if I'm not paying it on my credit card, which I do for these sort of transactions, then pay it back a month later, it's kind of like, well, I'm earning the interest from the first day I receive it, so it's actually earning from the moment. So I guess that's, you're saving more.
How much interest
Peanuts.
do you have these days?
I think I can't
0.01?
remember off the top of my head. It's probably something like 0.5% or something like that at best. I guess when you've got, I think the same principle applies, that even if it's a small amount of interest, it's better than nothing. And if the earlier you put it in, the more you actually have at the end of it. So yeah, I mean, I kind of am like, well, you've got all my money, so I'm going to get as much as I can out of you. It's not going to change my life, the extra maybe £1 a year that makes, but it's not exactly it's not costing me anything to do it. It's kind of like, well, it's a quick split my income across, and it's just, it gives me 3 options. Well, if I had more pots, I could put it into various things. Like people might want to go, oh, I want to put £500 into my holiday pot because I'm going away in 2 months, or something like that. But for me, I've got simple. It's my spending, my bills, and my savings. So I just split it three ways in the different amounts. It tells me how much my bills should be. Obviously, if I know that I've got something different, I'll add more in and just put that in there. Put my savings in one, and then the rest is my income, is my spending, so to speak. So I know that I'm always going to save something. So it's kind of just like, I think that's for me, that's how I manage, at least from the beginning, and obviously regularly monitoring.
And then the unexpected occurs.
Yeah, if something happens, then obviously then it's like, withdraw savings, because I put everything that I don't think that I need in there, because it's kind of like, then if it's out of my main account, then it's not there to necessarily spend. I'm quite disciplined.
So you move everything you aim to save into the savings account at the start of the month, and then if something bad happens, then you would move it back to your current account. Not a lot. I guess, it's kind of like,
if it is the case, then because I'm generally well disciplined, so I know I'm not going to spend on stuff that I don't necessarily need. If something happens, like I've had times when, say, I didn't realize that it was going to be then, but I needed to replace all 4 tires on my car. So I knew that didn't know that was going to happen. When I got it MOT, they were saying they're going to need changing soon, so I decided to change them all at that point rather than wait until they completely fail. So I changed them then. I then realized, okay, this is a large outlay that I wasn't necessarily anticipating, but I can just take that out when I need to spend it. But a bit of things like that happen, I don't sweat that I have to take it out of my savings. Obviously, I don't like paying for it if I don't have to, but I don't have to worry, it's going to ruin my, I'm not going to have any money. I need to cut back on other things I've saved up for these sort of eventualities. I mean, as I said, with my yearly plan, I have car maintenance I have a set amount that I roughly think that I might have to spend in the year. I know how old my car is. I know that these certain things are going to likely happen. Like, obviously, after every few years, I might need to change the tires. I have to do a service every year, and I need to fuel it every so often. So I know roughly how much I'm going to spend. So it's all kind of, and then obviously I know what my annual income is. I know what my annual expense. So I know how much of a buffer I've got for savings. So if the worst happens and something's a bit more, I know that I've got a bit of headroom.
Everything is kind of planned in your mind, so that when something bad happens, well, you already have anticipated that. You know that maybe in a year you will need to fix the car because your car is X years old. The problem that a lot of our users have is because they have a lot of transactions and a lot of transfers, then it's very hard for them to follow and understand their finances. And one of the key problems that they have is they don't know how much they're saving per month. And when you think about it, when you want to save money, your KPI, your key performance indicator, is how much you have saved per month. And when you don't know that number, then you can't manage it. You don't know what you're doing right in your habits, you don't know what you're doing wrong, and you don't know what you need to change to improve. So the solution that we found is to have a very simple equation. Money in minus money out equals the money saved.
It's as simple as that.
And that's it. Then people need to manage based on that and forget all the... I think it's counterproductive to have all these auto roundups, because people then start to believe that they are saving money when they're buying stuff and it will round up their ATP transaction and get like 20p saved. And what they're doing is they're spending more to have more transaction to save more, but at the end of the month they have more money spent.
Exactly.
So
I kind of
less
think
money saved.
that if you're saving 20p every transaction, then great. If you're someone who spends too much anyway, and if it's a way of it getting out of your main spending account, then I guess it's positive in that sense. But it's you're not really understanding how you're saving. So I kind of think that you need to know what your money in, money out. And that's what I think. One thing I like about Nova, and I used to do manually myself, but it's a case of this is all automated now. But it's back when I did it, I don't think open banking was something that was really quite popular, so you couldn't really do it back then. But it's just having all your accounts. I mean, you could if you've got simple finances, you've just got a current account and that's it. Then obviously you just look at your bank statement. Yeah.
You still need to understand your cash
if you've got
flows
multiple,
on
I've
one
got
simple
a
account.
current account, I've got a savings account, I've got a credit card, and then I've got a pot for bills. But that's something that I would class that as my current account. But I've got 3 accounts. I need to know where my position is. Yes, I might be spending on my credit card. It doesn't come out of my bank account until a month later, but I need to know that that's negative. So I might have £1,000 in my credit card, but if I've only got £500 in my bank, I think, oh, it's all good. But then £1,000 comes out of it. That's not good.
Yeah, so many people are tricked by their credit card because they keep spending and they keep saving into a saving account and they think, oh, my savings are growing. What they don't see is their balance on a credit card is also deepening into the negative territory. And the reason they don't see that is often the credit card, they don't show you a negative balance. For example, they would show you 2,000 as a positive number. So it's not alarming you when you see 2,000 and you don't think intuitively that you need to add up your current account or your balance minus your credit card. Oh no, I have 1,000 on my current account, 2,000 on credit card. Sounds good so far. And when they realize, because nobody gives the right sign to the credit card, it's negative, it's debt. And then when they realize, oh, that's 1,000 minus 2,000 of credit card. Oh crap, I'm in the red zone now. What do I do? And a lot of them, they report us and say, hey, why is it showing me that I'm negative? Look, I'm positive everywhere. How can I be negative? Why? Because they are not taught to think in terms of cash flows. And I think that's a big problem because using a credit card is so tricky and so dangerous when you don't understand the cash flows and all the implications
credit
of
card,
a credit card.
I from a young age always used it as my general spending. I use my credit card because I build up a credit history, I build up points on it, so I use it as my day-to-day way of spending, unless it's something small and I can use my phone, because my phone, Google Pay, doesn't recognize my credit card company, so it doesn't support it. So if I'm using for things that I can just pay with my phone, then that'll come out of my current account. But for things like my weekly shopping, that'll come out of my credit card. My filling up my car, it will come out of my credit card, everything like that. But I know that that's spending that I would have made anyway. So to me, it doesn't matter which card I use. I'm just using it, whatever gives me the best rewards at the end of it. And I know that I'll get a lump sum taken out my account every month, the month after, and it will just be like, okay, but I've already prepared for it.
Exactly, you prepared for it. But if you don't, it makes tracking your spending very hard because it's not moving the number on your bank account. You don't see how quickly you're spending and how far are you from overspending because it's all in one other credit card account with a number that is magically positive. And the only way to really see if you're doing well and if you're spending at the right pace is to aggregate all of that and then track it all together, which unfortunately what most people with credit card, they don't do. And this is why they get
definitely. And I think,
so often at the end of the month.
Number one step of personal finance, especially these days, it may not have been as easier back, say, 10 years ago, but would be to just have something that amalgamates everything. Even if you don't use it to track even if you don't look at it every day, but you can see your overall net position. And I think that's you have to know your net position, because if you've got a credit card, then you need to know what's negative and what's going out, because otherwise you're going to get into a trap, and it's not an easy thing to get out of.
Great. Akash, last question for you. You said that you're earning 0.5% interest rate at the moment.
Investing wise, your money? I've got one source of, like, in terms of investing other than saving. So through my company, I buy shares in my company every month. So it's a tax efficient scheme. So my company will take out £100, I think, every month, but I save on the tax and national insurance on that. So I don't I can't remember exactly how much comes out, but I obviously don't pay tax on that, so I save on that, and then but the whole amount. So I take 100, say £80 is actually what I spend, or however much the tax rates, because it's a bit more complicated. But £80 comes out of my pay, £100 goes into the shares. They'll buy shares, and obviously the way that they keep you is by going, if you stay for X amount of years, you then get complete tax-free. It's tax-free, everything you've gained on that. If you leave within 3 years, then you have to pay back the tax and all that sort of thing. So anything you gain on when they sell, if you leave, you have to pay the tax. So that's how it goes in. But for me, that's my investment is that. So I am happy to do that because I feel that it's tax efficient. So for me, it's like, even if I left, or no, not necessarily if I left, but even if the market price went down, like say 10%, I know that I've still saved.
You saved more than that on taxes. Awesome. The accountant has spoken.
Thank you. All right.
Thank you so much,
all
Akash.
the best to you. Bye.
All the best to you. Thank you for listening. I hope you found this episode enjoyable, inspiring, and educational. In this era of instant gratification, it is more important than ever to train our delayed gratification muscle. So keep learning, keep improving by 1% every day. You may not see the result right now, but this is a secret of all the successful people I've met. Please help me spread financial education by sharing this podcast with your friends and community. I would love it if you could also leave us a review. It really helps the show. Now, I would like you to forget about all the advertising that is being pushed to us on a daily basis and think about your personal financial goals. What do you really want to achieve with your money? If you have financial objectives, then check out the Nova Money app. Nova is an AI that will show you how to set financial goals and how to achieve them. A plan is only useful if you can follow it. That's why Nova will send you daily motivational messages to give you the strength to ignore the daily temptations of spending money and stay focused on your goals. Like other budgeting apps, Nova connects all your bank accounts in one place to give you the full picture. The difference is that the Nova AI will do all the budgeting and tracking for you. The second difference is that unlike many free personal finance apps, we don't sell users' data. All your data is encrypted and will remain completely private. Make sure that you're investing in your financial education. Make sure that you're building your financial freedom. And I'll speak to you in the next episode.